tell us a little about your portfolio. Why so few names? You know, obviously there has been some rumors of the performance up 6% for the first quarter. I know you can't say that's accurate or not accurate. With most of your portfolio up double digits, one down double digits, which we'll talk about. But give us just a take on why so few names, and
so for a bunch of reasons. I mean, I've always had the view that you know, why not own the best 10 or 11 investments as opposed to ideas 12 through 25 or 12 through 100, which is more typical. And you know, I think there are very few great investments at any one time. So the ability to concentrate is an enormously valuable asset of a strategy. The problem with it is it leads to bumpier returns. And it leads to more attention on mistakes or things that aren't going well. You know, I don't know a portfolio manager that doesn't have a stock that's down in his portfolio, right? But you don't read articles about, I mean, we're getting an awful lot of attention for a pretty high profile situation that's struggling. But I think there's, you know, it depends on what your business model is. But if you want to make high rates of return over a long period of time, it's hard to do that being very diversified. I mean, if you look through the Forbes 400, wealthiest people in the world, most of them made their fortune in one business or a portfolio of 2 businesses. Very few made it in a portfolio of 100. So it's that, and the other benefit, it allows you to run a much simpler investment firm. We have an 8-person investment team. If we had 30 names, we couldn't manage that portfolio the way we do with a small team. By having a small team, you can hire better talent.